our session today are live on YouTube as well. So I'll take a second to set that up. Okay, perfect. So before we start our session, it is my pleasure to also introduce our speaker of the day, Amit Jain. Amit is the director at PricewaterhouseCoopers India with an experience of over 14 years. At PwC, he currently leads the FinTech regulatory practice with industry focus on digital payments, digital lending, new age banks, cross-border remittances, and other FinTech segments. He's been extensively assisting his clients in obtaining necessary regulatory licenses, setting up of regulatory compliance and governance framework, policy, advocacy, due diligence, and other consulting areas. Amit also leads the PwC Knowledge Partner Engagement with Payments Council of India and works with industry groups and members on research and representation to policymakers on emerging fintech and digital payment matters. With this, I'll request everyone to give a big round of applause to Amit, and I'll request him to, take over the session and take us through his presentation. Over to you, Amit.
Thank you, Devang. Thank you, Devang. Hi, good morning, everyone. I hope everyone is safe and healthy. And maybe at the outset, thanks, Devang and the Andheri West Study Circle for giving me this opportunity to present my thoughts and perspective on this exciting industry. Exciting in the sense that there are a lot of innovation that keeps happening on this industry. And more relevant in the current pandemic situation where this industry is helping all of us to provide seamless financial services sitting at home, be it for making payments, be it for taking credits, be it for making any investments in the capital market or taking insurance policies. All of these products or services, we don't have to venture out in the current situation. And sitting at home, we can do all of these or take all of these services. So that's where the relevance of this industry that keeps innovating themselves and trying and coming up with lots and lots of innovations and seamless experience is something that they keep doing it. So with that, I'll now start my presentation. Just give me 30 seconds. I'm just sharing the screen. Devang, you could see the presentation on the screen, right?
Yes, Amit, we can see that. I'll request the participants to keep themselves on mute. Towards the end, you will have specific sessions where we can have question and answers. So in the meantime, during the presentation, if everyone can be on mute, that will be helpful. Thank you.
Sure. So with this, I'll start my presentation. Sorry, is there a question for me? Okay. So I'll start with the presentation. What I intend to cover as part of this presentation over the next 1.5 to 2 hours is help you understand this industry in more basic terms. What do we mean by fintech? What are the key technologies that are underlining being used for providing these innovative products? What's the India landscape when it comes to fintech sector in the market? And what are the cities which are predominantly having a lot of startups in those respective regions? What are the different subsectors of this fintech in terms of the products that are being offered in payments, lending, insurance, and other subsectors? What's been the funding that keep happening in this particular sector? Because from foreign investors' standpoint, this is a lot more attractive sector where VCs and private equity funds keep funding these products and the investments from since the last 4 to 5 years. What's been the ecosystem stakeholders in terms of which are the participants that are forming part of this fintech ecosystem. So I'll talk about that. And then I'll take you through the overview of what are the different regulations that are being issued by multiple regulators such as RBI, SEBI, and IRDIA. So I'll talk on that. And then I'll go more deep into digital payments as the sector, which is one of the core topic of this session today. That how does digital payments typically happen? What's the overall processes that are getting involved, the products that are being offered in the market, the regulatory framework around these in terms of the licensing requirements, capital requirements, and the other governance and risk management aspects. I want to touch upon on the KYC modes, what are being used by different companies, banks, and fintechs to provide or to have customers go through the KYC processes. Since this KYC is common, agnostic, all the financial service sector, be it banks, be it insurance companies, be it broking agents, I'll explain what are the typical KYC modes which are being used in the market and what are the associated regulations around that. Then I'll move on to the recent developments, what's generally happening and what we can watch out for the new trends that are going to happen in the sector. And last but not the least, I want to spend time on then what it means for CA as a profession with respect to the services that we can offer to this fintech and digital payment sector. So that's the overall content or the discussion topics which I wanted to make it part of this current session. So with that, I'll move to the first part of the section, which is fintech. As you can see on the slide on the right, there is a chart which gives a lot of names, terminologies, and the jargons or the words which we often hear in the market. Either it could be we are talking to any of our clients or we are talking to any of our peers, friends. These are the terminologies which are often being used to describe this sector. UPI, which is called Unified Payment Interface, API, which is called Application Programming Interface, Big Data, Neobank, InsurTech, RegTech. Now, these terminologies put together sum up the entire fintech sector, and I'll talk about some of these terms or the terminologies in greater detail as we move along. There's a word called GAFA, which is used to describe the four biggest tech companies in the world. G stands for Google, A stands for Apple, F stands for Facebook, and A stands for Amazon. So Google, Apple, Facebook, Amazon, that's called GAFA in short, which is also getting more deeper and deeper into disrupting a lot of these financial services. As you could have heard about these products, their products called Google Pay, Apple Pay, Amazon Pay, and for Facebook, we know that WhatsApp is already coming into the country and wanting to offer WhatsApp Pay as their one of the core product. So there are these terms which are often being used, and I'll talk about some of them in the discussion. Now, what is fintech? Fintech, in very simple terms, it's a technology embedded in the financial services. So the way the traditionally the banks have been providing their services to customers, be it for account opening, be it for doing KYC, or be it for providing any other financial services in terms of making the payment transactions, collection of funds. The moment there is a involvement of technology that helps to transform or ease out the way the customers can avail these financial services, that's the space which is called fintech, where the aim or endeavor is to try and simplify the experience of the customer in availing any of the financial services, be it for making payments, be it for making investments in any in any capital market, be it for taking digital online insurance policies, or be it for as simple as making investments in form of gold. If there is a technology involved in any of these financial services, that's in simple terms called fintech. Now, if we move next, what are the different technologies that are being used to provide these financial services and disrupt them? The underlying technologies that keep coming in to help the financial institutions use it to the best they can are some of these technologies called as artificial intelligence, machine learning, blockchain, facial recognitions, and some of the emerging technologies that we can see, which is going to be used once 5G comes into the country, such as Internet of Things, smart machines. Let me pick up 2-3 examples out of this technology and help you understand how do they work. So let's take machine learning as one of the example. Now the way there are a lot of these digital credit fintech companies which help to give quick 1 minute do 1 minute underwriting process to help you give credit. So let's say a simplistic example, like I'm a salaried person and I get salary on day one of the month, and I keep using or spending the salary for different personal expenditures. On day 25th, I am short of funds in my account, and there is a payment due on 28th of the month to pay my electricity bill. Now, what happens if there is a fintech startup company which have understood my data, because since it is all about data, if they understand the typical expenditures which I do, and they understand the income source from which I earn the money, they will run the analytics at the back end and come up with a short-term 5-day credit to me. And they just send me a notification on 25th of the month. Hey, you have an electricity bill payment due on 28th, but you are falling short of funds in your bank account. Do you need, let's say, 5,000 rupee as a short-term credit for 5 days to honor your payment? And that notification comes as a banking surprise to the customer. Hey, I was looking for money so that I don't fall short of my payment. And that's where these companies understand, analyze the data, and assess the credit behavior of the customer. The startup company know that this customer has the salary due, which is going to be received next month, and therefore they don't mind giving this 5-day credit to the customer. So that's where all these analytics run at the background, where they understand, go and access a lot of data of that customer, use it the way they want in terms of analyzing that, and then come up with a more customized products to the customer. Let's take another example, blockchain. I'm sure you would have heard about this concept a lot of times in the market. The Bitcoin, which is often been used as a cryptocurrency for, and now being also used for a lot of payments in other parts of the world. In India, it is something which is not been legally accepted by the regulators. But the underlying technology for this Bitcoin is blockchain. The concept of blockchain is, in simple terms, is it helps to create and generate transactional records in such a way that if at any stage of the entire process there is some manual intervention that happens through an external attack or any other form of intervention, that will trigger alarm in the entire process, and therefore everyone will then go back and look at what happened to the process. So the process is designed in such a manner through the coding system that at every step of this chain or the process, people know that what are the transactional records that are being used or saved, and therefore any changes to those records will let trigger to the second participant know that something is going wrong. Now, an example to explain this concept is, if there are 4 or 5 banks who want to use blockchain as a technology for saving or using KYC records for onboarding or updating any customers records in their system. So let's say there are 5 banks, and I go to a bank one and give my KYC records that hey, I want to open a current savings bank account with you. That bank will obtain all the required KYC documents with them and then keep it as part of the records. These records will also then be transmitted at the backend between 5 banks who have formed or who have come together as part of the block. So these 5 banks who have initially agreed to come together and form part of the blockchain technology will then agree in terms of the coding system and the process that they will agree together. So in the example, if the bank one has received KYC records from me, and if I go to the second bank and want to open another bank account with them, the second bank could easily use the records which I have shared with the bank one, because those records are now already part of the technology which is called blockchain. And any changes to those records, like for instance, if I've given a different ID which is not maybe the correct ID, and if that ID is being used to validate my details as part of the process, and which is not the correct details which was submitted in the past with bank one, that will create a sort of a check amongst these banks that hey, there's something which is not going wrong. So that's the way typically banks may use this blockchain technology, and there are many other use cases through which this technology can be used. Facial recognition, voice technology are some of these innovative emerging technologies which can be used to provide financial services. So for instance, using voice technology, and which is being used now by Visa and other companies to help make payment using my voice call. So I don't need to insert my PIN or password to make the payment. Using recognizing my voice, the payment will get effected, and that voice is now considered as a security feature to make the payment. Similarly, facial recognition, it could be like using as an identity management framework. So for instance, using my face, they can recognize that, hey, this is Amit, and therefore it could be used as one of the identity evidence to provide the financial services. So these are therefore these technologies which goes behind the entire process to come up with something innovative process or the feature that can help to change the way traditionally all the financial services are being offered to the market. Now you could see a lot of these use cases which I have highlighted where some of these technologies are being used. So for instance, quick transactions where I have to transfer money to anyone. So that's called person-to-person transfer. There are many products in the market which helps to transfer money. Unlike in a traditional way, I want to transfer money from my bank account to your bank account. I could use Paytm as one of the feature to transfer money to you. If I have to make payments to Swiggy, Zomato's, I could use P2M as a feature, which is called person to merchant transaction. G2P is called government to person transactions, where government have been using also significantly in moving the money for subsidies or other financial assistance. If they have to provide to people at masses, they have been using Aadhaar as a channel for transferring all the money to the respective bank account of the beneficiaries. Then there are automated reportings which are kept using by the banks and other fintech companies using the technology called robotic process automation, RPA. What that means is you are going to code the entire system in such a way that the robot will then take over that entire process and will pick up the information from the source databases, put it in the right format, and then submit it to the regulator. So the entire reporting happens end to end on a automated basis, and there is no manual intervention involved in terms of making any changes or sourcing any data. The process goes in terms of pulling out the entire data from the respective databases of the banks or insurance or capital market companies, and then put it in the format what they need to submit it to the respective regulators. Then there are other use cases such as account opening process. I'll speak more on that in the context of KYC. Remittances, if there are remittances happening cross-border basis from India to outside India or from outside India to India. Personal remittances, if I have to transfer money to anyone in US or UK, there are a lot of cross-border fintech products which are being offered in the market that simplifies the way I can transfer the money to my family friends outside India. Unlike in a traditional way where I have to go to a bank, fill up the form A2, fill up other documents, and then the remittances happen. These companies provide these remittance services sitting at home where I just need to register with them, give some information as part of the process. And once at the back end, they confirm and check that these remittances are permissible under the current account transactions rules of FEMA, the remittances happen the same day. Then there are other products, lending and investment insurance, which I'll speak in a while. Cyber security. This is one of the biggest threat to this entire sector, where technology at the same time is a boom in terms of helping to change, transform the way people want to provide or take services. At the same time, there are a lot of these cyber attacks that keeps happening, phishing attacks, hacking attacks that keep happening, and that actually sort of change the confidence of the customers or of the institutions in providing these. That's where the relevance of these cybersecurity companies comes in, that helps to try and ring fence the entire protocols, the way the services have to be provided, in terms of standards, IT security standard that needs to be maintained. So these companies actually comes and helps to manage prevention of these cyber attacks. Then there are fraud attacks, which keeps happening in the FS industry, where people are losing money when they transfer the money from one page to another page. And that's where these a lot of these machine engines are being used to understand the pattern or the behavior in which the transactions are being done. And these technologies helps to prevent to a larger extent in the frauds. And that's why even if the fraud happens, there are trails, there are audit trails to help understand where exactly the attack happened. And that's where the companies and a lot of agencies use these information or the technology to help detect those frauds. Then there are the regulatory compliances, customer support, which are also being significantly changed the way traditionally financial services are being done. And these technologies are largely being used to simplify the processes. If I move next, after talking about this industry, what's the landscape when it comes to India as a market? So India currently stands third in terms of the global ranking. So first is US, second is UK, and third is India. In terms of the overall fintech market, if you look at the overall size of this market, we have about 2,000 plus fintech companies. In fact, the number is quite large, but these are more prominent companies which are very much active in the fintech space. If we split this 2,000 into multiple products or the businesses, we see payments having the largest number of companies as a sector, 405, followed by lending or the credit, which have 365. Then there are other subsectors in terms of wealth tech, personal financial management, insurtech, regtech, and cybersecurity, where a lot of these companies are coming up with their respective or their customized products and services. There are other miscellaneous or sort of residual sector where there are a lot of these other small use cases which keeps happening, which keeps happening, and that that amount that put together have about 747 as a total number of startups. Now, if you look at the India map in terms of cities where these startups or fintechs generally operating from, Mumbai and Bangalore are the two prominent cities which have the maximum number of startups which are coming out of this space. Bangalore, as we all know, is known for the startups or the technology hub, and that's where you will keep seeing Bangalore being one of the attractive destination even for any foreign player who wants to come to India. They would look for engineers, IT employees being available most in this particular city, and that's where they generally prefer to have their office situated out of Bangalore. Mumbai, again, a financial hub where a lot of these banks and other financial companies are situated, and that's where people tend to prefer to be close to Mumbai as well, so that they have much more collaboration and partnership that happens between the fintech companies and the banks. Other companies, other sort of cities, as you could see, Hyderabad, they are also picking up in terms of the locational advantages, where they believe that some of these cities also do give them a lot of advantage when it comes to the talent and the other surrounding factors that they need to keep in mind. Now I go next and explain a bit more detail about fintech subsectors. So fintech subsectors are broadly classified into six subsectors. The first being payments, second is insurance, third is investment, fourth is regulatory, fifth credit, and sixth neobanking. In payments, you would see generally a lot of these fintechs offers merchant payments, utility bill payments. There are a lot of these person-to-person transfers that keeps happening. So therefore, there are companies like Paytms, Google Pay, Amazon Pay, products for person-to-person or person-to-merchant transactions. A lot of in the rural part of the country where we have a lot of these ATMs or POS devices for cash withdrawal. So there are good number of companies which provide ATM or POS device services to people situated in rural parts of the country to withdraw cash, or they have their own agents to help provide these retailer assisted payment or remittances services. If you look at insurance, insurtech sector, you will see a lot of these companies which are changing the way insurance products have been traditionally offered or sold in the market. The companies like Policy Bazaar, Turtlement, these companies are actually helping educating customers in terms of knowing the product features of buying any insurance, be it life or non-life insurance such as car, motor. They help you understand and compare the different products which are being offered by several insurance companies, and then help you come to a decision that which insurance a particular product is best in your background or facts of the case. Therefore, companies like Policy Bazaar act as aggregators where they at the back end partner with a lot of insurance companies and then come up with their own algorithms and help you understand the different products which are being offered to the market. Then there are other digital insurance advisors, companies like CoverFox, Echo, that keeps. By the way, Echo is more of a company which actually is the only technology insurance technology company that is providing insurance products on their own, just like any other insurance companies such as Tata, Birla Life Insurance, and others. Acco is a fintech startup that is also a manufacturer of any insurance product, and then they target and provide a more customized insurance products to the customers. Let's say example, micro insurance is one of the product. So if I am taking a ride in Uber from one place to another place, this company partners with Uber and provides 1 rupee insurance for a ride. So that's the customization that's happening in the market, where on the go you could take any insurance products, and then those insurance are offered with in bundled with the other services which the customer is taking, and that helps meet the objective of both the supplier of the products as well as the insurance company to provide their services. The third segment is the investments and wealth tech, where we have seen a lot of these companies like Zerodha, Grow, Scriptbox coming into the market and changing the way people used to make investments in the capital market, be it for mutual funds, stock, securities. These products are being designed in such a way that they understand the way my profile is all about, my sources of income, my expenditure patterns, and based on that they come up with a advice that, hey, do you want to make investment in a particular stock today or in a mutual fund today, because you have some ideal money sitting in with you. And that's the customization that's happening in terms of helping plan the entire financial management of the customers. So there are these companies which again use a lot of these advanced analytics at the back end and then come up with a more simplified version of making investments in the country. We see regulatory being the prime sort of component of any sector that we get into, and regulations play the core role in providing those services to the customer. That's where we see a lot of these reg tech companies coming into picture. Companies such as IDFi, Signzy, Onfido. What these companies does is they partner with a lot of these financial institutions at the back end and help to underwrite the customer in terms of the credit risk, or help in simplifying the KYC processes of the institutions. So for instance, a customer who have to be acquired or onboarded by a bank, these company will help in the process of the onboarding and collect data through the video KYC based or other alternative KYC processes in terms of DigiLock or other processes, and help simplify this entire onboarding processes so that the banks can quickly acquire onboard these customers. That's where these company comes in and tie up with the banks or the financial institutions. Then there's a concept called subtech or supervisory tech. That concept is not that common or prevalent in the country, but we will soon see this technology also being largely used by a lot of these regulators and agencies to understand the company's financial status. So a lot of times RBI have challenges to understand NBFC's affairs in terms of where are they investing money, where are they using money, are they actually commingling money, are they diverting money in some other non-permitted areas. That's where these technologies will be handy for RBI as an institution, where they could use data, understand the patterns, and then come up with their own analysis and have a more targeted inspection on those NBFCs, where they can ask more relevant and intelligent questions to see that, okay, the things are according to what's been permitted under the regulations. Another big sector is credit, which I spoke, which is the second highest in terms of the overall fintech segment in the country. There are a lot of these alternative digital lending companies that keeps offering customized products to both personal and SME, small and medium enterprises, where they use a lot of this data again to give more personalized loan. For instance, I need credit for 5 days. They can give me the example which I just gave. They can, if it in the case of SME, they could use the business turnover. When I say turnover, is more in terms of the cash flow, inventory, cash flow transactions, turnover, and based on that, they could understand typically how much credit the customer, the SME is worthy of. Unlike traditionally, where banks ask for balance sheets and other information, these companies rely heavily much on data, and based on data, they come up to a scorecard which they use for offering credit to SMEs or individuals. There are a lot of these platforms or marketplace which are again being used in the same way how insurance keeps giving you multiple options. These platform companies also keep giving you multiple options if you were to take credit from any regulated financial institutions. The new sector which is coming, and this is going to be like most attractive amongst the fintech, is called neo banking. What this concept in simple term means is these companies will tie up with a lot of existing financial institutions like banks, HDFC, SBI, or other banks, and they provide a much more digital experience to the banking services. The way the way the the way these the way these services are offered to the customers is it's like a more integrated partnership between the tech companies like your Open, OK Credit, Khata Book with the banks, and they take over the complete responsibility of the customers. So I, as an individual customer, if I have to open a savings account and also make payments and also use my bank account for multiple other purposes, including investments and other things, these company will own me as a customer when it comes to providing services and offer all the backend services in partnership with the bank. So I may not be required to go to my net banking or other mobile banking apps for making any payments or for looking at my bank balances and other features. These companies will register me as a customer and then start offering me all the services in a digitized manner, sitting in their own app. The Bank Open, Khata Book are the companies which are more targeting SME as their target customers. So the Kirana store who may be traditionally using their own Khata books for providing for recording all the transactions that they are giving on credit to the customers in the nearby locality. These company will open an app for this Kirana store and then record all the transactions as part of the app functionality. So their inventory, their accounting, their payments, their receivables, all these will be recorded in a platform or in the app where the store owner or this Kirana store owner can then understand on a real-time basis what is happening in his entire business in terms of the overall stock or the inventory, in terms of the receivables. So, for instance, the credit which the Kirana store gives to the neighborhood societies, all of that are recorded as part of his as part of his digital records, as well as if he has to receive money on the due dates at the end of the month, all the customers can use a lot of these digital payment options and can make payment to this Kirana store. So this is what all about neo banking, which is currently being considered as the most attractive business segment, and more in the current times, the pandemic situation, where a lot of these small Kirana stores of the world have to keep distanced from the customer, have to still provide a lot of essential services to the customers. That's why they are adopting these technology or these apps to try and help how they can simplify at the same time provide all the services what they are supposed to provide. So that's where all of these sub segments are there, and in each of these segments there are a lot of these companies that are being offering more customized services to both the institutional as well as the individual customers. If I go next, in terms of the overall investments that have happened in this particular sector in aggregate and individually in each of these sub-segments. So on the left side, you will see India have been receiving a lot of funding from a lot of private equity and venture capital funds. So in 2019, there was about $3.9 billion investment that happened in the entire fintech industry from private equity and venture capital funds. And these names, private equity venture capital funds, are names like Sequoia, Mayfield, Metrics, Tiger Global, many other private equity, which are SoftBank, all of these private equity, Tencent, Alibaba, all of these private equity funds or investments or private or venture capital keep coming and trying and see what's their role in funding these innovative startups. And they do come at various stages of the investment. Some come at the initial stages of the business growth. Some come when the business is more matured and scalable. That's where a lot of these high profile private equity funds comes and invest in those companies. In terms of the individual segments, we see payments, lending, insurtech. The payments, as I said, payments and lending being two most important segment at this point of time, and they keep getting the highest funding from the foreign investors. Now, if you look at the total number of transactions or the investment acquisitions that happened in the last 18 months, like from April 2019 till September 30th, uh, we see the number of transactions are 45 in case of payments, where there are, though the transaction number is low, but the amount of investment that's happening is quite high in this segment. In comparison, the lending, we see total number of transactions are much more amongst all other segments, but the ticket size of investment is relatively smaller than payments. And then there are other segments which you can see as part of the chart, where other investments are keep happening on a lot of these niche and sort of other sub segments of the overall fintech sector. If I go next and talk about what we have seen is what are the different sectors in the products. Now, which are the other institutions which are actually playing their own role in some form or shape in shaping this entire industry. So we have regulators, RBI, SEBI, IDA, which keep coming and promoting a lot of discussion papers, regulations, or any other sort of initiative that they keep doing it. And one of the initiative I talked in some time is about the sandbox, regulatory sandbox. So these regulators play an important role in terms of promoting or growing this industry. At the same time, ensuring compliances through KYC, through customer protection and other IT security requirements. NPCI, which is called National Payment Corporation of India. It's the India's retail payment institution, which have been the driving force for coming up with a lot of these innovative products such as Unified Payment Interface, AEPS, which is called Aadhaar Enabled Payment Interface, and QR codes, quick response code. So a lot of these products which you see in the market, the backbone for that products is this institution, which has the sole motto of trying and helping the country adopt digital payments as the front sort of a front end as one of the most preferred payment options. Then we have this ministry called Ministry of Electronics and Information Technology, MEIT in short. This ministry is given the task to come up with a lot of these regulatory initiatives, policies from the government side, and have a more consultative approach working with regulators and other industry bodies, so that there is much more forward-looking framework for the overall fintech industry, and in particular more on the digital payments. We have a lot of these industry bodies, think tank groups in the country, which have one of these agendas to try and see how fintech industry gets a voice before the regulators, or have a much more structured way of having a self defined rules to operate in the country. That's why the bodies like PCI, Payment Council of India, which is representing almost every payment companies as their members, and they have a collective voice to make their representations before the regulators, as well as define some of the self-defined SROs in terms of the self-regulatory rules which these member companies should follow. iSpirit is again a very is a body which actually helps government to come up with, or not government, but which helps regulators and other bodies to come up and innovate in the existing financial ecosystem. So this think tank group or the organization keeps using technology and coming up with the innovative architecture of the overall fintech in terms of how this institutions, like multiple institutions, should talk to each other in terms of several banks, ecosystem, regulators, insurance, and other companies, how they should collaborate and see if how they can use technology as an open architecture for providing and coming up with the services. So that's where this iSpirit role comes in, where they kind of help and see how they can play a role in the overall innovations of the products that is commonly used by all the institutions. Then there are other names, ASSOCHAM, FICCI, NASCOM, which we are aware of, that these institutions are being sort of taking a lot of voice of these members to people at large, or to regulators at large, and they do have their specific fintech committees where they invite members to make their own sort of comment representations, which can be collectively taken to the regulators. If I go next, and that's where I go slightly more deep into the what are the associated regulations which drives or which actually are being used to provide these services. On the left side, you will see overarching anti-money laundering regulations. As we all know that financial services generally are more prone to money laundering, terrorist attacks, and that's where the relevance of these anti-money laundering regulations comes in. So we have a Prevention of Money Laundering Act 2002, which is an overarching act which governs the all the KYC processes, the anti-money laundering processes, the transactions, suspicious transactions, that how that needs to be handled, which is the designated authority in the country which will look into the money laundering cases. So that this is the act which actually gives the powers to the enforcement directorate to look into these money laundering situations. Then there are prevention of money laundering rules. As a pursuant to these act and the rules, then there are sector-specific KYC circulars or the regulations which are being issued by the respective regulators, which is RBI, SEBI, and IRDI. Each of these regulators has issued their own KYC and money laundering directions that needs to be followed by the regulated institutions coming under their purview. We have overarching IT regulations in terms of Information Technology Act. There is a lot being debated in the in the industry that this act currently is not robust enough to handle the way the data are being managed and used in the country, the way personal data of customers are being used and transmitted between institutions in the country. And that's where the need for having our own data protection law to come into the country, where this Data Protection Act, once that becomes a law, will help both institutions, government, as well as the customers to understand the importance and the relevance of using the data. These institutions will be subjected to the process in which the sensitive personal information of the customers or the individuals, like our demographic information, our financial information, they will have to be subjected to the process in which these information can be taken up from the customers. It can be used by these institutions, and the way they can then transfer these data to other institutions based on a consent mechanism. So a lot of these points are being deliberated at this point of time, as we speak, the parliamentary committee has to come up with has to come up with the comments and the recommendations. And once this is taken up in the which is likely to be taken up in the winter session of the parliament, this data protection or data privacy bill will become the law. And once that comes in, there will be a lot of obligations with these fintech companies and banks will be subjected to, and that's where like everyone is working towards backward and understanding that what changes they will need to do as part of the existing processes and the systems, so that they are compliant with the law. uh, 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 when it comes to payments, we have Payment and Settlement System Act 2000 as an overarching act that talks about how the payment transactions have to be facilitated, which companies are required to take licenses to provide payment products, in terms of how these companies have to be regulated. So that's the overarching act, and that gives RBI the power to come up with the rules, the regulations, notifications from time to time. We have specific guidelines for companies which offers prepaid products or a wallet product, such as Amazon Pay, Phone Pay. So there are specific regulations, and I'll speak about that in more detail. We have peer-to-peer lending platforms. So this is a concept where individuals can become the investor or the lender, as well as the individual can become a borrower on the platform. So there are companies like Faircent, Lenden Club, and others where I can borrow from another individual using this platform. These platforms are also licensed by RBI, and there are certain risk and other governance aspects which these companies have to be subjected to. There is a recent guidance that came in on payment aggregators and payment gateway. What these companies essentially are the companies which actually helps at the back end to provide merchant payment transactions. So they provide the digital payment options to all these customers or the merchants. And the RBI has come up with a new regulations where they want these companies to be licensed and subjected to other regulatory requirements. Payments Bank, not that new in the country. RBI came with this guidelines in 2014. They issued licenses to a lot of the companies applicants, such as payments, such as Paytm, India Post, and others. However, given this business, payments bank business have a lot of conditions vis-a-vis the products, what they can offer and what they cannot offer. Fundamentally, the concept has not taken a good scale in the country, and therefore we see a lot of payments bank companies which have got the license have surrendered their business license to RBI back, and because of not having good economic sense. We have RBI KYC business correspondent and outsourcing guidelines that are fundamental to any partnerships that happens between the banks and the fintech companies. Then we have NPCI. As I said, that NPCI is the retail payment institution that provides or that have come up with these in UPI and other products. So they keep issuing instructions and other sort of conditions that these payment companies will have to be subjected to. On the capital market side, we have SEBI as a overarching act. Then there are other regulations or notifications which are issued, which these investment platform companies or robo advisor companies have to be subjected to. The specific one being the SEBI investment advisor regulations. So a lot of these fintech companies that analyzes the data and have to give a more customized view or advice to the customers. That's where these companies are subjected to this investment advisor regulations, where they have to register themselves with the SEBI and are subjected to the do's and don'ts in terms of the way they can provide their services to the customers. On the insurance side, we have a lot of these regulations, corporate agents, broking, web aggregators. Each of these regulations have their own nuances in terms of which entities are eligible to provide these services, the capital requirements, what they have to be followed, the compliances, the fair practices, the products, what they can offer, and in what construct they can offer these services. So a lot of these regulations provide clarity around the overall framework in which these companies will have to provide their services in terms of insurance products to the customers. So I move to the next part of the discussion, digital payments, which is the again an important topic in the overall context. Gaurav, I just want to say, do we have to pause or we can continue?
So we can continue. We'll take the questions at the end of the session. Hello?
Sure. So I'll pause. Okay, then I'll continue. Yeah, I can hear you. Okay, then we'll continue.
Yes, sir.
So getting more deep into how typically any digital payment transaction happens, and that's where this slide will give you a perspective, and I'll try and simplify this entire slide. So you see on the left and the right end, the participants which actually use digital payment options, be it individual who can be a payer, the government who can be a payer, and the businesses who can be a payer. These payers have to make payment to payees, which could again be an individual, government, businesses, or merchants. Now, between this are a lot of these companies or the other stakeholder that comes in to help make these payment transactions. Let's take an example that I have to make a payment on let's say on Zomato. Now, so Zomato is a merchant, and I am an individual as a person who wants to make that payment. Now, there could be 3-4 ways I can make that payment. The most simplistic is that I can use my net banking as one of the payment to make that payment, or I can use rather not net banking, I can use debit card to make the payment. Typically, these debit cards are issued by the issuer bank. The issuer bank, let's say in my example, is ICICI Bank. So I have a ICICI Bank debit card, which I have to use for making payment to Zomato. The way this transaction happens is Zomato also needs a bank where it can collect its money, which are being paid by the customer. And that bank is called acquirer bank. So acquirer bank on the right side, if you see on the chart, let's say Zomato is having a relationship with Axis Bank as their current account. Now, the way the transaction happens is I am using my ICICI Bank debit card for making the payment. The information on my debit card, which is with ICICI Bank, will be used for completing the entire transaction. So the way this transaction initiates is I go on Zomato app and make the payment using my debit card. Zomato have a relationship with Axis Bank, who is acquirer bank for them. The acquirer bank, the moment Zomato gives the information to Zomato, that the moment Zomato gives the information to Axis Bank that, hey, I have got this debit card details of a particular individual, can you verify the details? Those details are being then given by this acquirer bank to Visa, MasterCard, RuPay. So Visa, MasterCard, RuPay are the card schemes or the universal sort of schemes which actually helps the banks to transact and transmit information between each other. So let's say I have a Visa card of ICICI Bank. So the Axis Bank will provide these information to Visa. Visa will then use this information and recognize which card this bank belong to and which customer. Visa will, once they identify the credential of the bank, Visa will transfer that information at the back end to ICICI Bank. ICICI Bank will then verify my credentials and also see that whether I have the funds in my debit card or not. ICICI Bank will again give a positive or a negative response depending on whether the credentials are correct or the funds are there in the account. Immediately, Visa will transfer back these information to Axis Bank, and the Axis Bank will then give this information to Zomato. So this is the back-end process in which the payment transaction happens. In a very less than a second, this entire transaction gets completed at the back-end, where a positive or a negative information comes on the Zomato platform or the app that, hey, my debit card credentials and the funds are appropriate to complete this transaction. And once that successful response comes in, the Zomato gives me the confirmation of payment. This is the core of the process at the back end that happens, and whether it is a credit card or debit card, the fundamentals of these process remain the same at the back end, where these banks interact using Visa Mastercard process at the back end to confirm any transactions. Let's take another example. Let's say Google, GPay, or Amazon Pay, or Phone Pay. They provide this UPI services where we are using UPI as a channel for making any payments. Now, UPI as a product construct is being designed by NPCI. And the way NPCI designed the system is at the back end, they have again built the entire connectivity between the banks. The banks could be issuer bank, acquirer banks. And the technology that they use for this UPI transactions is called IMPS, Instant Money Payment Service. Using this technology, they are able to immediately transfer the money from one bank account to another bank account. And it can be a push or a pull transaction. Push would mean I am making a payment to someone, and pull would mean someone has requested a money to be paid from me. So in both the two situations, these UPI can work to help in more seamless, effective way of making payments from one bank account to another bank account. Typically, the way these products work is GPay, Google, or PhonePe or Amazon Pay will tie up with one of the bank, which is called the sponsor bank. So let's say Google Pay tied up with ICICI Bank as one of the sponsor bank. ICICI Bank have the backend connectivity already established with NPCI and with other banks. The moment any transaction I do on Google Pay for making any payment to a merchant, using UPI, the ICICI Bank at the back end will transact with NPCI and other banks and complete the transaction. Google Pay is not a regulated licensed institution in the country for offering UPI product. It is merely a technology company which is using bank as a licensed entity for providing these UPI payment services. So that's the way Google operates, that where they actually at the front end, they help in changing the customer experience in terms of the way you can make payments, you can collect money. But the backend, they're using the bank technology for providing all these payment and remittances services. These Google Pay and others are regulated or not regulated, but they are subjected to a lot of the instructions and conditions which are imposed by NPCI. But yeah, as such, they are not required to take any license from RBI. Now, in between these institutions, the banks and the customers and the merchants, there are a lot of these other companies which actually helps in some form or shape for providing the digital payment options. So the companies like Atos, FIS, Euronet, some of these companies are acting at the back end and helping to transmit or switch information. So the example which I told you, that if there is a card of ICICI Bank which is being used at Axis Bank merchant, the information that gets transmitted at the back end at Visa are being are being supported by these companies to move information from one page to another page. And those are generally in the market called payment gateway companies, which actually helps to which provide the technology to transmit these information or provide the other tech support. The payment gate aggregators are the company which actually helps in adopting a lot of these merchant digital payment options. So these companies go to Zomato, Swiggy's, and other merchants, including the Kirana stores, and help them to come up to digital payment options. So if a Kirana store is wanting to take payments using credit card, debit card, you could see these companies giving them a lot of these POS devices, with this mobile POS device or a physical POS device. The swipe machine that you see at the Kirana stores are being provided by these companies, so that these Kirana stores can take card payments, debit card, credit card, or other prepaid cards, and then use these payments for use these instruments for accepting payments from the customer. So that's where the role of these companies like Buildesk, Razorpay, CC Avenues, M-Swipe, and others, who actually are helping to get merchants come digital, be it in offline, be it in physical space, or be it in e-commerce space. Then there are other companies which provide cash management services for getting money to the ATMs, loyalty programs, which in some form or shape comes to help in digitizing the payment, digital payments products or the ecosystem. If I go more deep, I spoke about these participants in the previous slide. That okay, there's a remitter beneficiary, there are merchants. PPI issuers are predominantly called payment wallet issuers, which are companies like Paytms, Amazon Pay. Uh, there are acquiring issuing banks, which I spoke about. The card networks are like Visa, MasterCard, or RuPay. Then there are transaction gateway platforms, which I just spoke about. Now, a lot of these all put together, these participants use or provides payment products. And you could see on the right side, there are a lot of these payment products which I have articulated in form of the diagram. So UPI, which is Unified Payment Interface, I spoke about that, the way it's being used for making payments. *99 hash is a product which is more used in rural parts of the country, where people have feature phone, and they can use feature phone for making payments. So the people who don't have smartphones can still transact or make digital payments using feature phone by *99 hash. QR codes is called quick response code. This is just like how typically we scan QRs at any physical shops for making the payments. So this is that technology which is being used, where you see the codes at any of the merchants, and you can scan your app, or you can scan that code using a mobile phone, and immediately the information will come for confirmation. And once you confirm, the payment is made. Then there are RuPay contactless cards, which are being used, and more currently in the current context of the pandemic, where you just have to tap and pay. You don't have to touch any device for making the payments. IMPS I spoke about. That's the technology which is being used for UPI. NFS is National Financial Switch. Again, this is a switch which actually helps banks to use or transfer information for any ATM cash withdrawals. So if I'm a HDFC Bank customer and having debit card, and I'm going to ICICI Bank ATM to withdraw the cash, the backend technology which is being used is called NFS, National Financial Switch, which helps to transmit information at the backend, and that happens to help me withdraw the cash instantaneously at the ICICI Bank ATM. Then we have NETC, National Electronic product. What this product is commonly called as FASTag, where we have seen government have come up with a scheme, or they are now pushing that all these transport related payments, like your toll payments and other fuel payments, should be used using FASTag. and that's the backend technology which is being used is NETC. NACH is nothing but just like you're getting a recurring payments done with any service provider. So if you have EMIs or you have to make any subscription payments which keeps happening on a recurring basis, the technology or the process which is being used is called as NACH. CTS is more check truncation services, which is more digitized form of check clearing at the back end between banks. Bharat Bill Pay is again the infrastructure that was created a few years back by NPCI through the instruction coming in from RBI. This infrastructure is more used for making utility bill payments, electricity bill, mobile phone bill payments, and the way these payments have been simplified is that I can now make payments to any utility bill companies. In the past, there were restrictions on that I can make payment only at the designated utility bill companies, agents or the outlets. But using this Bharat Bill Pay, I can go and make payment anywhere to anyone for any of my utility bill or mobile phone bill payments. AEPS, Aadhaar enabled payment services, that's more predominantly being used for making migrant payments. So a migrant sitting in who has come to Mumbai city and he's earning over here, and he has to transfer money to his family in one of the village in any part of the country. They use the underlying technology that is being used to remit or transfer the money from the migrant in Mumbai who go to any retail store and hand over the money. On the recipient side, the person can receive money in the bank account using Aadhaar to withdraw the cash. So that's the technology which is being used. Bhim Aadhaar is again an app which is being used where Aadhaar predominantly is being used for a lot of these payment services. Wallets and cash card, I already spoke about the companies like Paytms, which provide these services. PA is payments aggregator, payment gateways. I already spoke about the way they use in the backend for providing services to offer digital payment options to merchants. P2P is a person-to-person transfer. Basically, individual remittances is something which these companies provide to offer this product feature. ATM, as we all know, POS is point of sale device. Point of sale device is nothing but just like your swipe machines, which you keep seeing at the Kirana stores and others. These devices are being used for digital payment acceptance of the instruments, and these instruments are like your debit card, credit card, prepaid cards. So that's the broad spectrum of the products, payments, which are prevalent in the country today. Each one has its own backend technology, regulations, the companies who can provide these services, the conditions in which they can provide the services, the customer grievances, the way they have to manage, the turnaround time in which they have to provide these services and also address customer complaints. So a lot of these regulations, instructions have been issued by RBI and by NPCI from time to time, so as to ensure that there is a strong confidence of the customers in using these digital payment channels and the products. If I move next and help you understand more about what are the typical regulations that are governing these payment products or services. Um, there are most of these products are subjected to licenses, or if not licenses, they are subjected to the procedural compliances from RBI and NPCI. So let's take example, any product called Amazon Pay. Now Amazon Pay is a product which helps you to make payments on Amazon website, which is the marketplace, or for that matter, Amazon Pay can help you to make any of your utility bill payments or merchant payments, or for that matter, any other EMIs if you have to make payment too. Now, Amazon Pay is have taken a license from RBI that's called semi-closed prepaid payment instrument license. Under that license, the company can provide these regulated payment products to the customers. There are capital requirements which have to be followed or subjected to these company in terms of how much capital that they need to have in place, what should be the net worth of these company to provide to be functioning as a regulated entity. Then there are risk management compliances to adhere to in terms of handling the fraud risk, operational risk, technology risk. How do they put in place all the processes, both in terms of the technology, as well as in terms of the as well as in terms of the processes, that how do they ensure that there are good enough controls to manage the fraud risk. Governance, these companies which are licensed are subject to governance standards prescribed by RBI in terms of the eligibility criteria for the board of directors who can become the directors, in terms of how they should do their businesses, in terms of setting up their committee, internal committees, which could be the product committee, your risk management committee, your audit committees. So they are subjected to these governance requirements. The foremost and the most important condition which RBI puts is to ensure that there are enough customer protection and grievance redressal mechanism put in place by these companies, so that the customer understands that if they have any complaints, who they can reach out to, what are the escalation mechanisms in terms of if the customer is not happy with the response provided by the company, who they can escalate within the organization, or if they are not happy with the company's response, even if it is coming from the CEO of that company, how they can reach out to to the banking ombudsman, RBI ombudsman, other alternative escalations which they can take to. Equally important is the information security, since there are a lot of these technologies which are being used. So these companies have to undergo the technology audits from time to time and ensure that all the IT security requirements are adhered to from time to time. KYC, AML, and CFT compliances in terms of what documents they can obtain from customer for onboarding, how they should on an ongoing basis do the anti-money laundering compliances in terms of any suspicious transactions if they detect, what they should do, and as a process to report that to the intelligence agencies in the country. If there are any sanctions check in terms of if they detect that there is an individual who is already under the radar with the regulators, if they onboard that customer, or if they detect that there is a potential customer who is availing their service, they have to immediately intimate the details to the regulators or the agencies about those sanctioned individuals or the organizations like Al Qaeda and many others terrorist organizations. Then on an ongoing basis, they are subjected to a lot of back-end transaction monitoring processes to try and see that the customers are not breaching the transaction caps which have been put in place by the company or the regulator. There are a lot of reportings which these companies have to give to RBI on an ongoing basis. Audit requirements, as we all know, that these companies, just like any other private limited companies, are subjected to stat audit, internal audit, and in addition, some other audits which RBI prescribes, such as technology audits. Escrow mechanism, the biggest the biggest condition as part of this entire payments business is how to ensure protection of customer funds. Since these companies are collecting money from us for the purpose of settlement with the merchants to whom they have to transfer the money, how it is ensured that these companies, if they go bust or if they go liquidated, insolvent, the customers' funds are protected and are managed well. That's where this escrow mechanism is being prescribed by the RBI, to say that all the money which are being collected from the customers are being kept in a separate designated account in an escrow, so that these companies do not have any control over utilizing these money for any other purposes, and the account and the funds held in this account are only being used for the defined purposes, and the defined purposes are for making payments either to beneficiaries or to merchants or for other sort of commercial purposes. But those are pretty much defined, and no one can sort of change these permitted debits or credits to that account without RBI consent. Then there are other requirements with respect to ownership. These companies, if they have to change the shareholders, investors, they are subjected to intimation disclosures to RBI from time to time, and RBI do keep coming back with their objection or reservations if they found that a new investor or shareholder is not fit in proper in their context as per their due diligence. So they do keep raising these questions, inquiries to the companies, and post satisfactory responses, RBI then accept these new shareholders or the investors. If I move next, and these are more details about what I just spoke briefly in terms of the different regulatory conditions and the processes. So PPI, as I said, as an example, Amazon Pay wallets, UPI, as an example, it could be GPay, Google Pay, or payment aggregators, the companies like PayU, Razorpay, Bidesk, who are now getting regulated or licensed by RBI. The slide gives more details about the capital requirements. If it is a PPI wallet company, the capital is for a fresh new company to start this business is 5 crore net worth, and then at the end of the third year, the company have to increase the net worth from 5 crore to 15 crore. For UPI, as I said, that it's not subjected to any license from RBI. However, at the same time, they are subjected to compliances from the sponsor bank, the bank with whom the company have partnered with, as well as the conditions which the NPCI has articulated for them. So these companies like Google Pay have to be subjected to a lot of these conditions on governance, on processes, on technologies, storage of data. All of that are being put in by bank and NPCI to them. For payment aggregators, we have 15 crore as a net worth initial requirement, and then at the end of the third year, the net worth have to be increased to 35 crore as a base. Governance, I spoke about that. RBI do expect these companies to have good governance standards when it comes to fit and proper criteria for directors, how they should have in place all the committees, policies, and the processes. Also, in terms of the fair practices that they should adopt to provide services to the customers. So both PPI and payment aggregators, there are prescribed regulatory requirements. When it comes to UPI, it's the NPCI and the bank. They subject these companies to the due diligence and the process. KYC/AML, the companies are subjected to have in place board-approved policy documents, customer onboarding, and then there are transaction limits. So if you see a lot of these companies like Amazon Pay do send a lot of these notifications that hey, you need to upgrade your status to full KYC product. RBI has given 3 categories at this point of time for any prepaid payment product or the wallet product. The first category is called no KYC product, which is where the companies can offer these product to any customer, and you can simply go and register and start making payments under any wallet. This is subject to a cap of 10,000 rupee, which is a monthly cap or a transactional cap as well. If the second category is the limited KYC product, where the customer is being asked with some additional information to get registered, and those additional information is getting OVD details like your PAN card details or your Aadhaar details, not Aadhaar details, because Aadhaar numbers can not be taken by any registered service providers, as this is being sort of subjected to an order from the Supreme Court, and I'll speak more on that when I come to KYC process. Then the third category, sorry, for the second category again is 10,000 rupee products, but that category gives you the flexibility to even top up your prepaid cards or wallets by cash. cash. The first category you can only top up by your digital payment options such as debit card, credit card, or bank. In the second category, you can even top up your card, prepaid cards or wallets with cash. So therefore, it comes with additional KYC, additional information process, and the due diligence. And the last category is the full KYC product, which is just akin to your bank account. This prepaid card or the wallet gives you all the payment features in terms of the person-to-person transfers, in terms of person-to-merchant payments, and this is up to a limit of 1 lakh per transaction. Now, companies have come up with their own business transactional rules, but from regulatory standpoint, if you are a full KYC wallet customer, you could have your limits up to 1 lakh rupee to be used for any transaction. When it comes to UPI, again, there are processes which have been defined by NPCI, and there are transactional caps for UPI transaction as well. The caps are like up to 1 lakh rupee. I can do one transaction for any payment, merchant payments or other payments. The limit is increased to 2 lakh rupee for specific payouts, such as if I have to make loan payments or if I have to make insurance payments or capital market, then the limit have been increased on per transaction to 2 lakh rupees. For payment aggregators, again, there are onboarding processes. Customer protection, I've already spoken about that. There's a lot more expectations from everyone to ensure that you have robust processes from RBI, there are pretty much defined disclosures, documents on the websites or on the apps for the customer to understand where they can reach out for any escalations. InfoSec, information security, again, a lot more serious attention comes from RBI that there are enough adequate security controls, business continuity plan, disaster recovery framework in place. The audits keep happening on these companies from time to time from RBI. One of the important conditions that RBI has put in is all payments transaction data should be only stored in India. Uh, that's the condition that came in last year in April of 2019, where all these payment companies cannot save or store their data outside India. And that is something which now all these digital payment companies, including Visa, MasterCard, are being forced to keep their data on a server in India. It could be their server, or it could be they could save it on any cloud or services being offered by Amazon and other companies. But the location of these servers have to be within India as a jurisdiction. If I move next and more go into the way typically how KYC processes are being offered or provided by financial institutions, be it banks, fintech companies, or insurance or capital market companies. But just before that, let me spend a minute or two on the Aadhaar as the core sort of identity which are being used for doing the KYC. Uh, so India is about like 1.3 billion population, and almost like 95% of the population today have Aadhaar registered with the UIDI as the authority. Now, there have been a lot of debates, noise around the misuse of Aadhaar at multiple places for vested interest, and that's where there have been debates, or there have been arguments both sides that how you should use Aadhaar, where it should be used, and this matter has gone up to Supreme Court a couple of years back, that how Aadhaar can be used for identity and for other purposes. In the context of financial service ecosystem, the court has ruled that the banks can use Aadhaar for KYC and account opening processes. And the fundamental to that point was that there is an Aadhaar Act and the Aadhaar rules, which the law gives power to financial institutions such as banks to use it and safeguard the Aadhaar demographic information in a more secured and protected manner. That's why the Supreme Court has given that direction that banks can, if there is a law which supports banks to use it, banks can use it. When it comes to non-bank institutions like your NBFCs, your payment companies, your capital market insurance, the Supreme Court has said that at that point in time there is no overarching or a more sort of comprehensive law that gives the power to these non-bank entities to use Aadhaar for KYC purposes. And that's where it has kept left it open and asked like if there is a way for government to come up with a more comprehensive law, then let that notifications or the law comes in, and then the non-bank entities can start using Aadhaar. Another point which Supreme Court made was that Aadhaar now cannot be forced to anyone to be given as an identity mechanism. It should be a voluntary option or choice of the customer for giving Aadhaar for the financial services purposes. So the bank or any other institutions cannot force me that I have to give my Aadhaar document or Aadhaar number for taking services. I can if I believe that I want to give other officially valid documents such as driving license, voter ID card, or passport for that matter. I could use that for giving it to the banks or other institutions. So that's where the backdrop or legality of these Aadhaar usage. Now, in this backdrop, if you look at what are the typical ways the KYC processes are being used in the country today, the most common or the traditional way is that if you go to any bank or the institutions, uh, they ask for your photo ID documents like your PAN card and photograph, and the person sitting on the other side will verify that with the original documents. And once satisfied, then they will open your bank account or start register you for any other financial service. So that's most common process which historically have been used by the financial institutions. At the same time, this entire process is extremely costly in terms of doing this process, both in terms from the company standpoint or the bank standpoint, as well as it is a lot more inconvenient for the customer, for the individuals like us, that we have to time and again give these documents to these banks, take photocopies, keep giving it to them, and there is also a risk that we don't know where these photocopies ultimately will land up to. So there are a lot of these risks which do exist in the system when we use this traditional way of doing KYC. Now in the bank, and that's where like banks are now mostly using biometric Aadhaar authentication way, which is the fingerprint authentication. So if you go to any banks, they use eKYC as a process now onwards, which is much more secured, much more faster, and much more cost effective for banks. So you go to a bank, you just have to put your finger to the device, and then at the back end, the bank get all your demographic information from the registered database, which is with UIDI, and the transaction gets completed. The process gets completed in terms of knowing all your background. They will then not insist you to give other document because they have got enough records, which is if those are updated, then those completes the KYC process. Now, as I said that the Supreme Court was not comfortable for non-bank entities to use Aadhaar and mostly this eKYC biometric authentication. That's where UIDA have come up with the alternative way of doing Aadhaar offline KYC processes. That's called Aadhaar offline XML or QR codes. The way typically these processes work is, and why it is called offline is, using these processes, the information is not being, the demographic information like your name, address, and others are not being retrieved from the UIDA database. Those information are being retrieved based on the information which is sitting on the Aadhaar card or Aadhaar letter, which is available on the UIDI website. So that's why it is called offline. Now, the way typically this XML or QR code process works is I can go to the UIDA website and fetch my Aadhaar letter, which is like the authentic information which is coming in from the UIDI. And those information then can be shared in XML form to the regulated institutions. So that file, which is like just like any other Word document file, can be given to the bank, and the bank can then complete that process in terms of decoding that file and then using that information to complete the process. Similarly, there is a QR code where using scanning the QR code on my Aadhaar card, the banks or the institutions can retrieve the information stored in that QR code and then complete the process. So in this process, therefore, you are not required to give any physical documents or Aadhaar card to the customer. In some of the places, people often use Aadhaar for limited financial service product, and that product is called OTP-based Aadhaar eKYC authentication. In a way that they send OTP number to your mobile phone. Assuming the mobile phone is the correct mobile phone registered with the Aadhaar database, then with the help of this OTP password, they are able to fetch that information from the UIDAI server, and then they give you successful authentication. Using this process comes with certain conditions because this process does not require you to look to see the customer or have a physical interaction with the customer, and therefore the RBI for current period, they are not very much comfortable in opening this product for every other financial service product. The video-based KYC have just been introduced like few months back by RBI, and this has been the long-standing demand by the institutions, where they could use video for authenticating for doing the process of customer transaction. The way a lot of these banks you would have seen like Kotak 811 account opening and many others are using a video-based offline process where they are using Aadhaar for the credential information, as well as doing a video chat or live chat with the customer, where the operations team of the bank and you are doing some offline video-based discussion. When I say discussion, it is just to kind of authenticate the customer that he is the customer who the person is talking to, and based on that video chat, the customer information, the photo, and the discussions recorded, along with other geotagging and other information that the bank have to obtain, and the process is getting completed. So this is something that we see is going to be revolutionary in future, where a lot of technologies will be used for authenticating or onboarding the customer using video-based process, where the customer will then not be asked to come to the branch, a second give documents, and everything will happen through remote basis, sitting and completing this process. Uh, Digital online process is one another form of KYC, but this is more meant to avoid paper. So this is nothing but like if you go to a branch, you will not be subjected to give any documents or your photograph. They will click your photograph at the branch or any other store. They will scan your documents. They will authenticate the documents and then keep these digital records with them. So this is just more about making the process digital, but not in real sense digital, such as video KYC, what I just spoke about. There's another concept which was introduced, but it has not taken much more aware. It is not much more being aware to the customers or to the institutions in the market. That's called CKYCR, Centralized KYC Record Registry Process. What this process is all about to the fundamental point, and which is by the way currently being used in SEBI capital market industry, such as this KRA agencies. What that mean is that if a customer has already given the KYC documents to one regulated institution, I should not be asked to give the same set of documents if I go to any other regulated institutions, be it banks, non-banks, or insurance or broker in the country. That's why this concept was introduced, that there will be a centralized database for KYC, where all the information of a customer is securely stored and saved, and any other institutions can use that information based on consent from the customer and retrieve all those KYC records if those are updated from that centralized database, and then use that information for completing the process. While the intent of this is very amazing in terms of simplifying the KYC process, or however, when it comes to execution of this concept, there have been a lot of technological issues, the support coming in from a lot of institutions. That's where this entire idea has not gone to the scale it should be. But I do expect that in the near future, you will see that a lot of institutions will start using this common database where the customers KYC are being saved, and then it can frequently be used for updating the KYC records or for retrieving the information, and the customer will not be paid for giving the documents time and again. That's where the utility of this database. With that, I come to some of these recent regulatory developments that's happening in this space. Um, uh, there was a notification, or maybe the section that was introduced in 2019 from under the Income Tax Act, Section 269 SU. What that provision means is that, and again, it goes back to the agenda of the government where they want to promote digital payments as a front runner in every transaction, every payment services that the citizens, businesses are using. So through this section, what the government is forcing businesses that any person having business turnover above 50 crore in the previous financial year have to mandatorily provide digital payment options on their websites or the platform or the services to customers to enable them to make digital payments. So this was the section which was introduced to promote creating a lot of digital payment options with the merchants, so that when the customer go and make payment to these businesses, they have the ability to make payment using debit card, UPI or QR code. So the section provides that these should be the three minimum digital payment options which should be available to customers with every businesses whenever they want to make payment. Now this entire section came with a mandate to be implemented by Jan 1 of 2020, which got extended to Jan 31st of 2020. And if businesses were not complying, or the companies were not complying with these requirements, then they would be subjected to penalty norms like 5,000 rupee a penalty for every day of meeting this compliance. Now, this section actually have sort of triggered a lot of issues when it comes to business businesses. So there are two times. One is business to customers, where the companies are providing services directly to the customers, like the retail customers or individuals. And then there are a lot of companies which provide services to business customers, which are non-individual persons. So those businesses may not be having these UPI or QR code as a functionality for making the payments, and therefore the clarification came in from CBDT sometime, I think this year, June or July, where CBDT has said that this section 269 SEO compliances shall need to be adhered to only businesses having B2C customer transactions and not B2B customer transactions. And that actually has relieved a lot of the companies in the country who were struggling to ensure compliance with this section requirement. Now, one of the fundamental point when government or CBT came up with this requirement was that they want to promote digital payment options, and therefore they also at the same time don't want to create this as a cost element to the businesses for making these, or to the customers for making these payments. And that's why they have said that at the back end, if there are any charges which are being levied by banks or the institutions for making or enabling these payment options, those should not be charged by these banks or institutions, because that will go against the digital payment growth of the ecosystem. And the government and the RBI came up with the requisite changes in the guidelines to say that if the banks are providing services to these businesses, they should not charge any commission or merchant discount rate, which is the common term used for any commission to be recovered from the merchant. Um, uh, what we saw in the market was there were still some banks which were charging these merchants for recovering their commission or the dues, and that's where a clarification or the notification just recently got announced from the CBDT that all those banks which were recovering charges from the businesses will have to refund will have to refund all the dues, commissions recovered from the merchants, effective 1st of Jan to 2020. I spoke about this sandbox. So what this sandbox, regulatory sandbox concept, and this is more now being used by across the three regulators and also is a global concept. Uh, there are a lot of times when these fintech companies wants to innovate or wants to come up with a very new product or the feature, they are subjected to a lot of these regulatory burden or the requirements, and which actually comes as a bottleneck for coming up with these innovative products. That's why this concept has been introduced across the globe and in India, that for those fintech companies which wants to come up with a new use case or which wants to test a new idea, they can go and work with the regulators under a controlled environment. When I say controlled environment, would mean that there will be the the cohorts, or there will be a different space which will be given to these fintech companies to try and test their idea with the immediate data, with the technology and the other controls that the regulator will expect them to put in place, and test their idea. Once that idea is tested, the success or failure of that comes out, and if there's a success, and the company wants to now take that idea to a bigger market, then those companies will be subject to the same set of regulations as are being subjected to any other company wanting to offer that or come up with that product. So in summary, this concept is more to give some relaxations to some of the existing regulatory conditions or the processes. Uh, at the same time, bearing in mind that uh, uh, there are certain conditions which RBI or the other regulators will not be comfortable to. So in terms of data privacy, customer protection, the RBI would still expect these companies to maintain those requirements. But there are still other conditions which, if the company wants a relaxation, they can go and make an application to RBI or the regulators, and then test their idea within the controlled environment and give the results or the outcome of that idea to regulator, and then take it to a larger market. Now, each of these regulators, RBI, SEBI, and IDA, have come up with those sandbox cohorts. Cohorts is just nothing but a small group of companies or the people who wants to run the idea within a specified period. So all these regulators have come up with the respective cohorts in which they are inviting applications from the fintech or the other industries or the companies who want to come and innovate. They come up with the respective themes where, for instance, RBI has the first theme that they want to run with this sandbox cohort initiative is for offline payments. So if anyone wants to innovate on coming up with any product feature using offline technologies. Offline would mean where you do not have internet connectivity. What are the product features using Bluetooth and other technologies which can be used? RBI has invited applications for those companies to test their idea in the sandbox environment, and the process is currently underway. Similarly, SEBI and IDEA has also in their own respective ecosystem come up with inviting applications from companies and fintech institutions to test their ideas within the respective themes which they want to come up with. What we could expect in the payment space in the next 1 to 2 years is there are a lot of some of these announcements which have been made by RBI. The recent announcement being Pan India umbrella entity. What this entity or the institution would mean is, I spoke about NPCI is a current retail payment institutional organization which have been coming up with a lot of these retail infrastructure and the products. RBI wants to bring competition in a similar space of the market where they would invite the global technology companies, India conglomerates, and other financial and non-financial institutions to come and form a entity through a consortium. Consortium could be a mix of like a bank, non-bank, or technology company, and then once they are licensed by RBI, they can introduce and come up with a similar infrastructural retail payment products, just like what we got UPI. There could be many of these new UPIs or any other new innovations happening in this payment space. So that would be the objective of this company, to start bringing global technology experience to the India market, and try and see how they can innovate in the existing products, features, come up with a new infrastructure which can then be used by other payment companies to introduce more digital payment experience in the products to the market. RBI has also come up with a requirement that a lot of these companies which are operating this space, if they can set up a self-regulatory organization where these members will be subjected to all the discipline and the processes in terms of providing their services to companies, providing their services to the customers. Offline retail payments, this is something which is the next to do for RBI, while a lot has happened in the digital payments in online connectivity domain. But there is a lot more opportunity when it comes to the other parts of the country where there are still internet issues, technology issues, where people are still using feature phone for mobile for call purposes. How payments can go and attract those individuals or those places where these individuals using offline retail payments can still become part of the payments ecosystem and start using payments as one of the mainstream channel for a lot of their daily routine payments. So that's where RBI is inviting, or they're inviting ideas, innovations, and they will run a pilot scheme to try and see if those the pilots are being run in a more secured and controlled manner. And based on the outcome and success of these pilot schemes, then they will come up with a more prescribed regulatory framework for offline retail payments. So this is my last slide on the topic, and that's where I want to spend time on this entire industry, which I spoke about in terms of the participants, in terms of the products, in terms of the investment that keeps happening in this sector, and the other services which we as a CA profession can provide to this entire industry. Um, I have put down, these are only indicative, and I'm sure there would be many other services which can be taken up by these companies from the CA profession. Um, the first being audit, which is again common to any other companies which provide which are established in the country and are subjected to tax, stat audit, internal audits. So these companies will also be continue to be subjected to these requirements. One unique audit that keeps happening in this sector is audit of their systems or the platforms, called CISA audit, Certified Information System Auditor, which are empaneled and by banks, which can provide audits, system audit services to these companies. A lot of these audit reports have to be submitted to RBI at times to ensure that their standards, security protocols are being adhered to. So that's the space where a lot of these like the CAs who can get registered themselves with the requisite qualifications and then start doing these audits. A lot of times, both at the time of licensing requirements and on an ongoing basis, the regulators calls for net worth certificates and other declarations or certificates. That's where the profession can issue these certificates based on review of the records of the companies and the promoters or the founders. Licensing work, a lot of these products requires license from the respective regulators or the registrations, where we can help these companies to help in the entire application drafting stage, documentation process, and other processes that needs to be written as part of the application, which can be given to the companies for submitting it to RBI. Tax compliance, again, a very common service. These companies are subjected to GST, corporate tax, withholding tax, and other compliances which the profession can provide to. Transaction advisory, as I said, that there are a lot of investment that keeps happening from venture capital, from angel investors, from private equity funds, and other investors in the country. And therefore, you would hear that there are a lot of these transactions that keeps happening. Either there is a new investment, additional investment, or there are exits happening, or there are acquisitions happening, consolidations happening in this entire ecosystem. That's where the services like due diligence services, your valuation services, could be provided to those transactions, the documentations, review, transactional review from from tax and regulatory perspective. So a lot of these services could be are being offered to these companies, and that's where a large scope is available to the profession. Regulatory compliance, so being regulated entities, they would be subjected to an ongoing as well as the initial compliances in terms of setting up their documentation, like your KYC, email policy, risk management, outsourcing, grievance redressal, information technology, IT security policy documents, your audit committee charters, risk management committee charters, then your reportings, which have to happen over a period of over the entire year, as well as in terms of any review of the governance, what they are looking at in terms of the directors composition and other compliances. So a lot of these requests to keep coming in from these fintech companies or startup companies. As you all know, these founders or the promoters generally are more tech professionals coming in from IITs, IIMs. Therefore, they will look for support more in terms of regulations, risk, compliance, and that's where they look out for external support, that where the profession can help in ensuring these compliances are being met by these companies. Accounting work, again, a common to any companies where they need help. How do they ensure that accounting entries are being properly taken care of for all the transaction that happens in their business. And the last but not the least is all around this day-to-day advisory services, which is common across all the other services where they need help time and again for a lot of understanding of what's happening. If they want to come up with a new product, are their products compliant with the regulations? What are the tax nuances? What are the GST nuances involved with the new products or the services which the company wants to offer, including the partnerships. So a lot of times these fintech companies have to partner with banks or other regulatory institutions. They want to take help in terms of review of their partnership, in review of their collaboration, technology agreements, understand more from the tax perspective, what would be the withholding implications, GST implications. So these are common queries or requests that keep coming in from these companies or the other players, and that's where the role for all of us to try and help ensuring that we keep providing advice from the tax, regulatory, and other laws point of view. So that's the broad spectrum of the opportunities that arise. I've already spoken this sector do provide an immense opportunity in terms of the way they have been functioning, the way they have been, the entire sector have been growing, and this is going to grow in the next few years, including the decade, and that's where it will be an opportunity for all of us to try and see how we ourselves are updated, upgraded, and have requisite knowledge to continue providing services to the companies. So I'll stop here. I'm happy to take questions now.
Hello. Yeah, I request any members questions that unmute themselves. Amit, I have one doubt. Like as it is, as you have mentioned, Google Pay is not regulated.
Yep.
So, if in case of any fraud or any payment error has been occurred, uh, whom do we have to approach? Like, can we approach the bank or any other regulatory authority or someone?
Sure. So, see your first point of contact. If since you name Google Pay, so let me give Google Pay example of the process. So, your first point of contact would be Google Pay themselves, where you can register your complaint. Where if you are not satisfied with or the fraud happened or something like that, and you have lost your money, you can raise your complaint. The Google Pay call center can provide the response and help you address that complaint. And if there is a fraud that happened not on account of at your end, but on account of some technology frictions or the gaps, then the company is liable to, like with the partnership which they have with the respective bank, they are obligated to refund the money back to you. But if for some reason they are not happy and you still need to escalate that, you can reach to the sponsor bank of Google Pay. So Google Pay have partnered with
म्यूट
multiple
करने के बाद
banks.
नहीं आता
Google Pay has partnered with multiple banks in the country to offer these GPay services, like ICICI Bank, Axis Bank, and others. You could reach out to the respective banks to provide these services to sort of address your campaign. The last resort is if you're still not satisfied, you could go to the banking ombudsman on the RBI platform or the website. There you could register this complaint. The RBI will then sort of, as part of their ombudsman process, they can sort of try and see how best they can help you address your complaint. So these are escalation mechanisms which are available. RBI, just to add, RBI has also come up with a detailed customer protection measures to these companies, where they have said that in what instances the customer should not be taken up to task if there are complaints happening, or if there are frauds happening at the company's end. So unless there's a compromise of the passwords or something which is more to the customer, but otherwise, if there are something which customer is not involved in, the companies have to honor those complaints within a turnaround time, and have to also make the payment or sort of address the complaint within the specified timeline. So that's where all these obligations have been casted on to the companies from RBI.
Okay, okay. Thank you. Uh, we'll keep the forum open for 2 minutes. If in case if any members have any query, they can unmute themselves. I guess that's it. Thank you, Amit ji. It was a very in-depth session explaining us about each and every aspect and component of the digital payment, the fintech itself, the different companies, the technologies, and as well as the regulations. Thank you so much.
Sure, thank you. It's my pleasure to be here, and like happy to kind of, if there are any more questions, which if any of our other members are looking at, feel free to write to me or call me. I'm happy to kind of give you offline answers to those questions as well. So thank you once again. It's been a pleasure joining and participating in this session, and look forward to any
Thank,
other help if the circle requires me to come next time. Thank you so much.
thank you so much, Amit ji. Okay.